Alright folks, I usually come up with some jokes to lighten up the mood, but today I really need your full attention. What I'm about to say can actually make you or save you a ton of money, but you really need to take action fast, guys. And this is not any sort of financial advice, because the reality is that the market prices, they're overvalued. Everything is overpriced. So if you don't see this coming, you're about to get smacked harder than a pinata at a kid's party. Alright, let's get to the facts, guys. It's all about the money supply. Because over the last few years, the Fed has been printing money like Oprah giving cars. You get a car, he's got a car, we all get a car, you get a dollar, we get a dollar. Everybody gets a dollar, and almost 80% of the dollars in circulation have been printed in the past 5 years. And now what happens when you flood the market with cheap money? Yeah, exactly, everything inflates. Stocks, houses, basically everything. Your sense of financial security. The S&P 500's performance looks incredible until you adjust it for all the funny money. So strip away the M2 money supply and you realize this isn't growth. This is literally a balloon filled with hot air. But what happens when you actually prick the balloon? But wait, there is more. Let's talk about valuation, guys. Right now, companies in those indices are trading at price to earnings ratios that would make even Elon Musk raise an eyebrow. It's not because they're smashing sales or they're inventing the next teleportation machine. It is because everyone dumped their pandemic cash into the market like there is no tomorrow. And here's the problem, guys. Raising interest rates are making debt more expensive, corporate profit margins squeezed, consumer spending weakening, yet somehow those stock prices are still partying like it's the 1990s. Unfortunately, there is a spoiler alert. The party doesn't end well. And then there is the macroeconomic picture. Let's call it a ticking time bomb. Corporate debt is at record highs, the Fed's playing bad cop keeping interest rates high, and inflation, it's like this guest who refuses to leave the party because he stays always a little while longer. But now let's address the elephant in the room, guys. This is market sentiments. Right now, retail investors are piling into these indices thinking, oh, this time is different. It's not. It's the same greed-fueled optimism we've seen before every major correction. Remember the 2008? Yeah, me too. When everyone's buying, who's left to keep the rally going, guys? It's almost like a game of musical chairs, but you won't be laughing if you're the last man standing when the music stops. So what does this mean for you guys? Should you panic? Should you sell everything and just hide under the mattress? Or potentially now it's time to get smarter. Look at your portfolio and ask yourself, am I prepared for a correction? If not, you're about to experience the financial equivalent of sleeping on a banana peel. And look, market corrections are not the end of the world. There's some sort of a cleanse for the markets, a bitter detox that sets the stage for a healthier growth. But if you're not paying attention, you'll end up as someone else's liquidity. And do you really want to end up there? That's definitely not a fun position to be, guys. So here is the bottom line, guys. Markets are running on fumes. Inflated by easy money, overpriced stocks, delusional optimism, they're overdue for a reality check. Whether it's a minor pullback or a major crash, it's simply coming, guys. The question is, are you ready? And this is in no way a financial advice, guys. I'm just expressing my personal opinion. In the next section of this video, you're gonna see two of the trades that were taken this particular week. I'm recording this video on the 20th of November, so I took one of the trades today, the other one a couple of days ago, and this will show you what exactly I mean by the markets are due to correction. Those trades are double-digit returning trades, and they're based on my belief that actually the markets are definitely due for a major correction. And now is probably the best time to take part of it or just stay on the sidelines and watch the big train coming. I hope you enjoy the rest of this video, guys. And yes, I'm in a Hawaiian shirt. It's time to celebrate, guys. Not just to celebrate, but to open up a champagne bottle. Anyways, back to the video. So here is my DAX trade, guys, from this morning, and it is currently almost 1:19 risk to reward ratio. I took this trade based on my day trading strategy, and so far it is actually exceeding expectations since I was not expecting such a quick drop. We are close to 1:20 actually, and going back to the slightly higher time frames, the 15-minute charts, we can see that there is probably a little bit more potential for this to go down to the next zone, which is somewhere around here. So I would consider if I should be taking profits here, since it is already quite a tremendous trade in terms of a risk to reward ratio. This is close to 1 to 20, and the price just keeps on going lower. So now the question is, do you really want to get greedy, or is this the most stupid thing to do, and shall we just book profits here? So yeah, that's a good question to have, and also a good place to have it. So let's see what will be the outcome of this trade, guys. I just wanted to make a second part of this video, guys, and then show it actually it pays to be patient and to wait. So my trade is almost 10x is more than literally half an hour ago when I recorded the previous part. So we are now close to 1 to 27 risk to reward ratio. I'm still holding on to this trade. If you remember this zone, the zone hasn't been reached yet, so I would still hold on to the trade. And the exact risk to reward currently is 1 to 25, let's say. So yeah, I'm still holding, and let's see where this will take us. All right, guys, I think I'm gonna close this trade here. We're making a new low, which for me is a sign that's probably a lot of profit takers will appear. So I'm gonna close this trade here, and that's it. 1 to 28 almost has been reached, guys. It was absolute pleasure being with you today. Here is the second double-digit returning trade for the week, guys, and this is just a 1 to 10-ish risk to reward ratio. But the most phenomenal thing is that those trades literally happens a couple of days between each other, and even actually less than that. So that's the phenomenal part of it. So we have weeks like that. I've even had weeks with trades that are like 3 double-digit returning trades. There is no way you can predict or envision that. And as you can see, the price keeps on going lower, and currently it is around 1 to 11. It doesn't really matter. What matters is when you close the trade, what is your risk to reward. Like the previous trade, we closed at 1 to 28. I'll just give it a little bit more time, and then I'll see if I would like to close this trade or not. But what I'm looking for is potentially this area here, which could give us around 1 to 23-ish. But currently, I'm just leaving this trade on, and let's see what the future holds for us, really. But I'm very excited. It's been a tremendous week, and I can start feeling the volatility is coming back. This is probably one of the best times to come back to trading if you have actually been away for a little bit, because the US elections have passed, the volatility and liquidity are back to the market. So we can be better position from now to Christmas to make the most of it and then take some break. But these were some side thoughts, guys. So yeah, I'll leave you here. It was a pleasure recording this video as well, and I'll see you in the trading room, guys. And guys, this is the last trade of the week. It's absolutely phenomenal. 1 to 12 risk to reward ratio here. And I think I'm going to be taking profit since it's Friday, and I really want to finish this day quickly. But look at this, guys. It literally took me 10 minutes to get to a 1 to 12. This is absolutely hilarious. Closing this trade here, guys.